Today, we're gonna kind of bring things together a little bit and talk a little bit more about actually executing a trade, both on the buy side as well as ultimately selling it. We'll touch on a little bit about market awareness, building a daily focus list to focus on which stocks you're going to buy, position sizing, stop losses, when to actually buy, and then some really simple, but in my opinion, really useful sell rules. So first, market awareness. Dr. Wish just kind of touched on this. When the market is crummy, it's a lot harder to make progress, especially if you're trying to do the same thing, buy breakouts, all of that. So you have to be aware of what's the overall health of the market. Are we in a strong market, weak market, developing uptrend, weakening uptrend, all of that. It's really important to stay on top of that. You also want to think about what could the market do today based on what's already done. How will you respond based on what it does? Today we had a gap down, and then we're currently closing really well. So if you weren't prepared for the gap down, you were caught off guard. Maybe you sold some pilot positions, out of nowhere, and then all of a sudden the market just rallies on you. So you got to be ready for any scenario. As I mentioned, are we in an uptrend, downtrend, chop? Really simple. You guys can just take a look at the GMI signal or the GMI score, and that gives you a great sense of the market as well. So this is just a screenshot of the QQQ earlier today. For me, we're below a declining 21 EMA as of this screenshot. We've actually rallied quite a bit today, but for me, when we're below a declining 21 EMA, that's this purple line. We're in a short-term down cycle, and until we get back above that, it's best to be primarily in cash and just kind of waiting things out and waiting for things to improve. But we have actually rallied quite a bit today, and individual stocks are also acting quite well. So, I think one of the most important practical things I can say is to really focus your attention when you're looking to make new buys. When I started, I would have my overall focus list of like 10, 15, sometimes even 20 names. And then, on any given day, I just show up and say, all right, among these names, which do I want to buy today? What's completing a setup? I've really switched things up, and now on any given day, I only focus on 3 to really 5 names, and really focus on those specific stocks, and that helps my overall execution. It helps me stay on top of things, and overall get better entries on those opportunities. So, of your focus list of the names in on the Growth 250 or whatever is your bigger list, how do you find these 3 or 4 names? You basically want to use the strongest combination of both the technicals and fundamentals. The chart pattern should be the most ready, meaning it's in a longer term uptrend. There's been a consolidation. There's a recent tight area. That's for me personally. It could be different for you. And there's kind of a clear pivot buy point. And each evening, I kind of go through my weekly list, which is again like 10 to 20 names. And I basically try to find these top 3 or 4 names for the next day that I'm looking to execute upon. So this is just my focus list from actually yesterday. My daily focus list, PDD was on there, really tight here above the 21 EMA. This is VRT earlier today, again tight above the 21 EMA, over in a consolidation pattern. Duolingo formed a base, pushed up a little bit, and is also tight on the right hand side. That's why I picked it. And lastly, we've got NVIDIA, which was also moving up the right-hand side and tightening just below the 50 SMA. So these 4 names were my focus list for today. So just again, I'm looking for a longer-term uptrend, a consolidation pattern, a move off the lows, and then a tightening with a clear pivot point. Here I was using the high of the prior day, as well as that lines up right with the 50 SMA. So setting buy points, how do you determine that? Basically, you're looking for a tight area with a clear pivot. That means a level that you expect there to be a directional move when the stock crosses that. Where will the short-term momentum restart? That's what we're looking for. For me, it's a buy through the top of a range. And then I always want to ask myself, where does this setup fail? If I'm buying from a range of 2 to 3 days, if it breaks the low of that range, that's telling me that my setup was invalidated and I should exit my position, and that's where I place my stop loss. So setting my stop loss, the big question you want to ask yourself, whatever setup you're using, it could be a range breakout, it could be a green dot, it could be a black dot, a bounce off a lower Bollinger Band. Where does the setup fail? For using the lower Bollinger Band buy as an example, if it then breaks that low and breaks the Bollinger Band again, it's telling you that that downtrend isn't yet done, and you should exit your position. For me, I always look for a valid technical reason, either below the low of the day, low of the range, low of the prior week, or below moving average if applicable. Position sizing, these are just kind of guidelines that I think are pretty useful, especially when starting out. I would say you want to stay under 10 names. Just like with your daily focus list, the less stocks that are in your portfolio at any given time, you're going to be able to actually manage them properly and give them enough attention so you know exactly what they're doing, whether they're breaking down, breaking out, whatever. And that way, that'll just help your overall execution. I typically go with 5 to 8 names when fully invested. And as I mentioned, concentration helps you manage things. For 100K portfolio, it's very simple. 10K equals 10%. And I believe the 100K portfolio is what you guys will be trading with in the simulation. And to calculate the number of shares you want to buy, just divide the position size, here 10K, divided by the price of the stock at that given time. And that spits out how many shares you want to buy at that time. Then you can easily calculate your risk. What's your entry price? What's the exit price, meaning your stop loss level, times the number of shares, and that gives you the dollar loss. And here, if you bought the stock at 100, set your stop loss at 95 times 100 shares, that would be a $500 loss if that stock does stop you out. So when to buy, what do I actually look at? And this is a screenshot of the platform I use, but it's pretty much exactly the same in TC2000, which I know you guys will be using. I have columns set up where I've got the last price, the price percent change today, the volume run rate on a 20-day basis, which is exactly the same pretty much as your volume buzz. So you can think of them exactly the same, and then volume as well. So what I do is when I've got my daily focus list, I set alerts right below the pivot point that I want to buy at. So I'm notified as the stock is moving towards that level. Then you want to buy when a stock is emerging from whatever setup and completing whatever setup you decide to use with momentum, and ideally on volume, on high volume buzz. I look for at least, above average, which for this metric would be above 100%. You can see NVIDIA is slightly below it at this point, but PDD here is moving on 400% of the normal volume. That's a lot of volume coming in. So ideally, the stock is moving on elevated volume buzz and is pushing higher with momentum. So changing over to the sell rule side of things, we want to stick with the trend for as long as we can. And depending on your time frame, whether you're going to be more of a swing trader or more of a position trader, which is more Dr. Wish's style, you're going to switch up your sell rules a little bit. But I think these are two pretty good guidelines that are similar to what I use personally. To stick with that trend, we're going to use moving averages. Keep it very simple. Simple is very robust, and that helps in the market. And you basically want to sell 1/2 on 2 closes below the 21 EMA, that moving average, and then sell the rest of your position, the last 1/2, on 2 closes below the 50 SMA. And as you get more experience, you can develop your own sell rules and get more nuanced with it, adapt on the fly a little bit. But especially at the very beginning, when you guys are just learning, you want to keep things very systematic. And I think these are 2 pretty good rules, sell rules, that will keep you in the game when you've got a nice winner, and also exit when the trend turns. So I've got an example here. This is NVIDIA from earlier this year. We had a prior uptrend going from left to right. We're above all the moving averages. We form a consolidation here for a few weeks. We form a tight pivot at the highs of these 2 days. We break through that. This is our buy point, our simulated buy point. You can notice is also on a pickup in volume here. This is higher than the prior 2 days. Once we're in it, it keeps us in it all the way until we break and close twice below the 21 EMA here. And you can see we ride that trend really nicely. Even here where we break below the 21 EMA once, it keeps us in it because we don't close 2 straight days below it. And this is basically where we would sell the first half. And then just a few days later, It slices below the 50 SMA and closes twice below that, and that helps protect our mental capital as well as our gains. Because from this point on, Nvidia, as we'll take a look at in just a minute, live, continue to base out and is now just kind of setting up again. So bringing it home here, daily routine key steps. This is a good kind of guideline, daily routine that you can follow. Keep an eye on the general market conditions. If stocks are working, just recently, we've been in a pretty choppy environment for the last few weeks since the end of July, and things are maybe just shaping up or improving slightly here. We're not sure completely, but keep an eye on the general market conditions will help you know when to be aggressive and know when to be very defensive or in cash. Then you want to plan every trade that you're going to take. Have a daily focus list of maximum 3 to 5 names, 3 to 4 names. Set position sizing in advance. You should know exactly how much you're risking for each stock as well by setting that stop loss level. Use alerts just below the key pivot buy points. Watch for high volume run rate as the stock approaches that pivot. Enter confidently. Once you've set that plan, go ahead and execute it. And then once you're in it, that day, it's all about how the stock closes. So stocks can move around a lot intraday, but if it breaks out well and then pulls back intraday, it's all about how it closes from that point. And ideally, we get a close right near the high of that day. Then after that first day, what you want to do is watch for continuation, meaning successive days of strong action where the stock continues to make progress for you. Sometimes there'll be a tight consolidation day where the stock doesn't move very much, and then the stock reconfirms and breaks out again, and that's very constructive price action. Then at that point, once you're in that trade and you've got a profit for you, you basically want to continue to manage risk using your stop losses and then ultimately your sell rules. Whether that's the 2 closes below the 21 EMA, 2 closes below the 50 SMA, you can go ahead and choose. So I know I ran through a lot there pretty quickly. So Dr. Wish, any follow-up questions before I move on? I've got a few more slides, but that's kind of the bulk of what I wanted to prepare about actually executing a trade.
I did have a question about your equivalence to volume buzz, because it looked like it was a 20-day moving average of volume, but volume buzz is changes throughout the day based on the average number of shares traded at that time of the day. Does your indicator do that, or is it different?
Yeah, it's the exact same thing. It's the real-time volume run rate, but looking at the past 20 days. So volume buzz, I'm not quite sure what time window they're looking at, but we have both a 20-day version of this as well as a 50-day version. But it's the exact same at that time of day. How is volume compared to normal? It's not looking at the moving average. Yeah.
Great. Okay. Thank you.
Yep, of course. Any other questions? 'Cause I know I ran through that faster than I was probably meaning to. So.
And I think it'd be good just to show them examples of stocks and charts and how you apply the rules. Yeah.
Sure.
Well, I think we have a question somewhere. Wait a minute, Richard.
Could you go back to the when to buy slide really quickly?
Oh, I'll give you my slides, so no need to like take screenshots or anything like that. You guys will have this. But did you have a question on that?
I just wanted to see one of the bullet points real quick.
Cool.
Can we have it over here? I think there's a question over here.
How do you set up your alerts for your stocks?
Yeah, so I use trend lines. So I basically draw a trend line just below that pivot point level. So if my pivot is at 100, I'll set, one at 98, maybe even one at 96. And then as the stock moves higher, I'll get triggered on that first early alert, that second early alert, and then I can make sure I'm actually watching the stock as it's trying to approach the point where I actually want to buy. Yeah, good question. All right. So yeah, we'll run through some examples and look at some live charts as well. So first, following up a last presentation, I mentioned I purchased 2 stocks. CEIX was one of them. RYTM is the other. This first one, CEIX, turned out to be a winner for me. I bought from this tight range. This is my pivot point. Because it gapped up, I bought early in the session here. It was moving quite powerfully on very high volume run rate. this is how I handled it. You can see it trended nicely for quite some time. It formed this kind of lower trend line here. Then it broke below that, and this was an early sell signal for me. So again, getting a little bit more advanced here, but I sold half my position on this day. Then as it followed through down the next day and broke this low, early on in the session, I sold half of my remaining shares. So that another quarter of my original, but it held that rising 21 EMA. So I'm waiting for a close, two closes below this 21 EMA to sell my last bit, my last quarter of this stock. But again, here's kind of putting it all together. We've got a prior uptrend above the moving averages. We've got the tight area with a pivot. I bought as it broke through that pivot, sold a little bit early here, that initial position, that initial half, and then I'm riding the rest for a larger move above that 21 EMA. This is the other stock that I bought that ended up being a loser. So it's pretty fitting that of the two stocks, one ended up being a winner, one ended up being a loser. That's pretty much what you can expect when it comes to your batting average. I set my risk about 3% below the prior day's low. You can see the next day it completely reversed, stopped me out. And so I was protected during the following decline. It's moved up a little bit recently, but overall it was down at 21% from my buy point. So if I didn't have a stop loss, if I didn't manage my risk, I would just be sitting, feeling all the pressure. But instead, I'm out. I was able to protect my capital and reapply it and look for new opportunities that are set up again. So that's pretty much it for RYTM. I actually quite like that it stopped me out the next day because that gave me pretty quick feedback about whether the stock was going to work or it wasn't. You can see CEIX continue to progress the next day. This is kind of what I mentioned about continuation. It pulled back this day, but then immediately continued to trend really nicely.
Richard, do you look at weekly charts on them too before you decide to buy?
Yeah, so here's CEIX on a weekly, and I actually showed this in the original presentation. So what I liked about CEIX was the chart, the overall setup, the industry group it was in, and the fundamentals. I don't think I mentioned too much about the fundamentals last time, but you can see on the weekly chart, we had a nice prior uptrend, a big base that it just broke out of. This is actually a green line breakout. Then this is the setup on the daily chart that I basically used at this time after it had already broken out. The estimates for earnings were up 68% for 2023. Sales growth was also very strong. And at the time, it was in basically the top 10 industry groups. It was 7 out of 137 groups. So it was in a leading stock in the leading group that was just emerging from a large weekly pattern with very strong earnings and sales growth. So all
And
that
a prior uptrend.
Yep, a prior uptrend, exactly.
Yeah.
And yeah, here's the daily setup that I shared here. There was an earnings surprise, the last earnings report. That's another thing that I look at. And yeah, the stock acted really well, and this was the setup that I used to purchase that first position. And I think on the last bid, I'm up 15%, and we'll see how that closes. So, and you mentioned swimming with the current. I actually had a slide on that. I found that my best trades always are when three key factors align: the market, the group, and the stock. They all come together. The market is in/starting an uptrend. For me, as I mentioned, that's when the QQQ is above a rising 21 EMA. The group is in/starting an uptrend, and the stock has already shown power. It's already in a longer term uptrend. It's formed a consolidation and is just emerging from that consolidation. So it should be both above a rising 200-day, 50 SMA, and this is kind of the magic recipe when the market lines up, the group lines up, and ultimately the stock lines up. And I do have a quick thing here. Breakouts don't work well in choppy corrective markets. That's 100% true over the past few weeks. Any breakouts that have occurred, give it right back, and you really want to wait for that uptrend to come where everything's coming together to focus on those type of traits.
And Richard, to translate what you have with the rising 200 SMA, you're basically in a stage 2.
Yes,
uptrend.
exactly. Yep.
Yeah. Okay.
All right. So that's actually all I had. But I know that was pretty quick, but do you want to run through some live stocks in,
Sure.
yeah, all right. So this is my focus list. And just setting the stage here so everybody's on the same page. This is my 21 EMA, this purple line. This red line is the 50 SMA. This black line is the 200 SMA. And I put on both the MACD and the 1044 stochastic. So you guys are familiar with those, I'm sure. I've got my earnings and sales table down here. And then over here are where my columns are. I'll stretch this open. You can see percent change today. We've got basically the volume buzz, the volume run rate right here. And I've also got basically the daily 1.1 stochastic, the daily closing range here. So if you go to NVIDIA, it's basically right at the top of its day's range. It's got a 95% stochastic 1.1. Same with QLD and Duolingo. You can see is a little bit worse at 64%. So it's a little bit above half this day's range.
Yeah, Richard, can I hold off? Because I talked to them this morning about the Stoke 1.1. That's what that is, everyone.
Yep.
It's showing you where the stock price is in that current price bar.
Yep, exactly. So let me talk live a little bit about why I chose these four, and then this is just an ETF of the market for today's kind of price action. So Duolingo, if we ignore this last bar, actually, let me move this here. Just ignore this last bar. You can see it was tightening here. These ranges were pretty much contained within this range. We've moved off the base lows. We're above a rising 21 and 50 SMA. And then these highs are pretty close together. So this was going to be my pivot point where I was looking to buy as it pushed through this line on a pickup in volume. Today, a lot of stocks moved quite fast and on nice volume. Duolingo was kind of lagging and it wasn't moving with much momentum, which is why I didn't actually take this one. But I did take VRT, which we'll get to later on. NVIDIA, bringing up that chart. Again, we're in a longer term uptrend above a rising 200-day. We're in a stage 2 uptrend. We were forming a consolidation. We were moving off the lows, and then we were starting to form out a range here. And I used a pivot of this high right here, which lines up with the 50 SMA. And I always love when kind of important levels line up. So we've got the confluence of both the prior day's high as well as that 50 SMA, and that was my pivot. And this also lagged a little bit, so I didn't take this one, but it's acting quite well today, which is good for the overall market in general. This is one of the mega caps in the market, but it's acting well, pushed through that. You can see we had a gap down and then a strong close so far. We'll see how it actually closes the day. But that's basically what I was looking for. It pushed through the 50 SMA as well as that high on volume. PDD, if we ignore today's bar, what I was looking for is we were in a longer term uptrend. The 200 SMA isn't increasing much, but it is slightly increasing. We're above a rising 50 and 21 EMA. We had formed this consolidation. We had a sign of power with this gap up and strong move higher before that consolidation. And then we were really getting tight. All these closes are very close together. That tells me that there's subtle accumulation going on, and it could be ready for a nice, powerful move. This one really acted well. This is one of the first stocks this morning that pushed higher and broke out. I think CrowdStrike also had really nice action early on. But basically from this compression where things really get tight and coil together above the moving averages, that's basically what I'm looking for. And it can lead to really nice moves like this where it's up about 7.5%.
Richard, would you call that something like what Minervini would call a VCP?
Yeah, exactly. So from left to right in this base, you're basically coiling tighter and tighter. And these last four bars, they're very close together. Even in here, it was getting tight. So whenever it's tightening like this, that's that exact thing that Mark looks for, the VCP characteristics.
And talk about the volume, because that's important in that pattern too.
Yeah.
Right?
So the idea with the VCP is we're seeing sellers get tired and getting wrung out basically, and there's bigger players, bigger institutions kind of accumulating those shares. So basically with each push lower, we're trying to see less and less volume come in, less and less sellers come in. We see a little bit of selling in here. We've got a gap down. The next pullback, you can see lower volume, and overall from left to right in the base, we're seeing a decline in volume until today where we see explosion. So you almost want to see a breakout both in the price as well as the volume when a stock finally completes that VCP. And yeah, this is exactly what Mark is looking for. And VRT is another good example of this, actually. So this is the one I actually took right through this level here. Again, we're in a longer term uptrend. The stage 2 started quite a ways back right here. We're above a rising 200-day, 50 SMA, as well as 21 EMA.
Richard, it seems like the class just disconnected very briefly. They're coming back in.
Yeah, no problem. Did I start with the stock when you guys were here, or?
Yeah, no, they just dropped out a second ago. It was just brief.
Yeah, anyway, we're in a longer term uptrend above all the moving averages. And then again, we're forming that VCP where we've got prior strength, prior uptrend. We form a consolidation, and then we really tighten up on the right-hand side. You can see that this bar is entirely contained within this bar's range. So this low is higher than this low. This high is less than this high. And that's true for this bar because this bar's action is completely within this one. So it's really tightening on the right-hand side. And again, we see that breakout in price. We're not seeing the huge volume so far, but if we open this up and take a look at the volume run rate, we are running about 50% above average. So by the end of today, we will see a nice pickup in volume here. And it's already above yesterday's volume.
So Richard, I have a question for you.
Sure.
I really would like to ask Mark this because I never had a chance to ask him this. But basically what he says is, in his pattern, when the volume is drying up, that means the selling is drying up, correct? Why couldn't you just say that that means also that the buying is drying up?
So it's both, because with every transaction, there's a buyer and seller. I don't quite say buyers and sellers. I say buying pressure or selling pressure. So I've asked Jim Ropo this, he's a hedge fund manager, manages over 100 million. And when he sees tight price action with low volume, what he's seeing there is any seller that comes to market, there's kind of quiet accumulation coming together from institutions. They're taking up the shares and keeping price where it is. They're supporting price. And overall, the lack of sellers and the lack of selling pressure was what leads to that lower volume. I'm not quite sure if I explained that perfectly, but for each transaction, there's a buyer and the seller. So it's not just that there's a lack of sellers, but there's a lack of activity overall because nobody's really interested in, there's kind of an equilibrium that's met both from the buyers and sellers.
Right. Okay. Thank you.
Yep.
Could you close that door?
All right. I guess what I could do is run through my larger list for the week and kind of run through what I was seeing and why I'm watching these stocks.
So Richard, before you do that, I had noticed VRT in social media, people talking about it.
Yeah.
And I'm wondering why, other than the technicals, is there some reason that it got your attention? And why you think it's a good company?
Yeah. Look at the growth numbers in terms of the fundamentals. I'll zoom in actually here so you guys can see it a little bit better. But if we look down here, you can see each quarter that's reported, and basically it's seeing tremendous growth, plus 400%, plus 360%. And we're seeing EPS surprises where they're beating expectations by 44%. They're beating expectations by 60%. Revenues is also supporting that. You're seeing surprises in revenues as well. And this is the future estimates for earnings and sales. And you can see that the tremendous growth continues to be there. We're seeing plus 89% earnings growth, 65%, 35% revenue growth as well. So yeah, for me, I'm probably more focused on the technicals, but I always like to see really strong earnings and sales growth. And I believe that this company is involved in serving kind of databases and some crypto related themes as well. So crypto and AI. So investment in that theme, which is also what NVIDIA is riding, is going to help this type of company as well, which this is kind of a pick and shovels play on AI and databases.
Okay,
Yep,
great.
sure. So yeah, running
The
through
other
my
thing, by the
yeah,
way,
go ahead.
Richard, I know you have a little bit of time.
Mhm.
I think it would be useful for them to understand, like the Trader Lion platform, what types of things you have available that they might want to, so they could educate themselves about some of these concepts. So you don't have to break to that now, but at some point it'd be great if you could do that.
Yeah, I was going to show the free webinars that we're doing on YouTube in a bit for sure.
All right, good.
Yep. Yeah, so running through my focus list, just kind of to break down what I'm seeing with each of these names. PDD we already brought up, we've already analyzed it, but again, we're seeing that longer term uptrend. VCP really tight these past few days. And I actually made an indicator that kind of shows that volatility contraction. Let me expand that here. It basically measures relative volatility to recent price action. And when it gets really low, below 5, that means price is really tightening up on a relative basis. So we saw that here right before the breakout. It basically went to 0. And that's what I want to see before a breakout. CrowdStrike, this is again a larger theme. This is basically its stage 2 breakout here, where it's formed this base, little consolidation on top of that base, and now it's breaking out on large volume. If we look at the volume run rate, we're seeing plus 300% volume run rate. It's already higher than the previous day's price action, so quite strong breakout here, right near the high of the day on a big pickup in volume. So this could be a
So
stock.
excuse me,
Yeah.
Richard, so to the class, so here's what you could do. You know, you're going to get these slides, or you can look at the recording. Take a look at some of these strong stocks that Richard is showing you, and then pull them up on TC2000 with the layouts you have, and see how you could use what we've given you to analyze the stock. Do you come to the same conclusion, the same buy points that he did? Great, thanks, Richard.
Yeah, of course. So CrowdStrike, a developing theme that you could watch for continuation buy points afterwards. TIGR, this is a definitely smaller, more speculative name that I'm just pretty much watching, but it had that same kind of tightening at the bottom here, where these closes are all really close together. It was forming this base. We had this prior move showing strength, then consolidation, and it's just moving off the base lows. So this is a very early cheat entry. That's what Mark Minervini would call it. And it will likely set up another buy point before it breaks out from this base. PLTR, this is another name that's kind of forming a cheat entry. There's a lot of these right now because that's where we're at in the market right now. Is a lot of stocks are completing cheats. We have a prior strong uptrend, then it started forming out a base. We're above a rising 200-day moving average. We've started to move off the base lows. We formed one more contraction. We're above a rising 21 EMA. These two highs, these 2 days, pretty close together. You could have used that as a pivot, and we've seen a nice breakout again on large volume relative to where we are in the day. VRT, we already talked about. DraftKings, bringing that up. This, again, a cheat entry, not super powerful yet, not back through the 50 SMA, but again, formed a range here down here and is moving higher, and looks like volume is running just 5% above average compared to the past 20 days. MOD, this didn't really tighten up too much except for these 2 days and actually kind of moved yesterday, but we've now seen continuation higher. You could have also used this high as a potential pivot point, but this was more on from the weekend list, and it didn't quite tighten up as much as I would have liked to. Uber, just kind of watching as this base forms. We're again very early, even if this uptrend sticks. You know, we're still super early on, just moving back towards the moving averages. So just watching to see if this creates another follow-on buy point. NVIDIA, we already covered. App, again, this is another great example of volatility contraction pattern where within this consolidation, you can see double inside days where this day is in this day's range, this day is within this day's range, and we have a nice move off the 50 SMA. Hasn't closed super well yet, still right at these highs, but one to watch to see if it can finally push above here and potentially start a new trend like it's been in pretty much this entire year. This one is
So,
also well off high, so there's more overhead supply to deal with here, but it's been in a nice trend. Go ahead, Dr. Wish, sorry.
yeah, so when you look at this stock, look at it on the weekly, and what
Yep.
you should see, this is basically a bounce of the 10-week average, the 10-week average being roughly equivalent to the 50-day. So I would suggest what you do is you go and you would pull it up, look at it on its daily, and then pull it up on the weekly and see if you would see the bounce of the 10-week average. Yeah,
Yep, exactly.
yeah.
Amgen, again, prior strength, I always look for this. It's back above the 200-day moving average. It's just kind of forming out a potential stage 2 breakout if it can actually push higher from here. But, we pull back to the 21 EMA area and it's acting okay. It didn't really tighten up as much as some of the other names. I always look for, 2 days of highs where it's pretty close together and then a clean breakout from that point. You can see a little bit of hesitation on this day where it tried to move higher, then didn't close super well. But today, after the gap down, it's handled it really nicely. MBLY, this one I'm more just watching. It's a recent IPO involved in autonomous driving technology. It's still a little bit wide and loose in here. So I'm watching to see it more tighten up, and ideally it gets something like 2 inside days like we've seen in a few of these other examples. Coursera, maybe some of you have taken courses from here. It's basically online education. It's been in a nice, strong trend, and now is forming a really tight consolidation. This is only about 6% deep as of this moment. So this is, again, there's not much give back here, and it's been trending and almost increasing as the market is pulling back. So it's showing really good relative strength. We've got 2 highs now the past almost 3 days where it's pretty close together. So this could be on my actionable list for tomorrow. Pivot buy through these highs here right around 18.3. Tesla, acting well. It set up a range right here where it tightened up this one day, pushed through. It's now consolidated a little bit and another nice move off lows today, and could set up for another pivot buy if it breaks through kind of the 262 level on volume and falls through this momentum that's starting today. Lastly, Costco is a good example of a tight range that moved to the downside, where again, we've got a prior uptrend, consolidation. It was forming this range. It didn't get crazy tight in here, but then today it broke all the way down to 540 and it's now rallying a little bit. But for me, this pattern needs a lot more time because it didn't push cleanly to the upside. So that's a brief run through of kind of my weekly list and just kind of voicing my thoughts when I go through all these different names. But Dr. Wish, did you want to kind of go through any stocks in particular and kind of see how I interpret things, and maybe that helps people read the charts for themselves?
Well, you've covered a number of the ones that I've been watching, but I wanted to ask you, a number of these students are not going to, the approach that you're showing involves you heavily involved with the market every day. In other words, you go into the market knowing your focus list, knowing where you're going to buy, and you're watching it. But for them as students, what about using some buy stop orders or something like that, where the stock will break out during the day, they're not going to be watching, and use that as a approach?
Yeah, that's good. So when I was working at the Naval Research Lab 2 summers and falls ago, and I couldn't watch the market during the day. So what I would do is I would kind of do the same preparation on a weekly basis, where I'd have my actionable list of stocks, and then I would set buy stops at the top of the pivots, and they would either trigger or they wouldn't. And then at the end of the day, I would basically take a look, see if I bought it or not. If I bought it, was I stopped out? What have you? So you can definitely be successful, and it might even be an advantage to not watch the intraday price action, because that can scare you out of a stock that ultimately works. There's a lot of heartache that can eliminate. So I don't think not being able to watch the market is really a disadvantage. It's a disadvantage in some ways, it's an advantage in others. So it's kind of a give and take.
Yeah, it's sort of like what you described, is like when Nicholas Davis would just use his buy stops and then put his stop orders in, and he felt, watching the market all the time really hurt him.
Yeah.
You know what I mean?
When he moved back to New York, his performance worsened.
Yeah.
So you can always make something work and adapt to your lifestyle. So Yeah, you can make it happen.
Take a look at ERIE,
Sure.
ERIE.
Yep.
I was intrigued by that.
Yeah. So for
No, that's
me,
not it. It's not it. It's ERIE.
oh,
ERIE
I did
Insurance. You know who it is.
Airy. Yeah, I got you.
Yeah.
Yeah, nice. So you can see I've got a mark. I've been watching this name. So yeah, I like this. We've got this prior sign of strength where we had a gap up, back up through the 200 SMA, huge volume coming in, nice continuation higher. It set up this consolidation. It was setting up this nice clean area here, broke lower, was supported at the 21 EMA. This is why I really like the 21 EMA because it captures a lot of these moves. And then it pushed higher from here. And these 3 days were a short-term range where you could have bought right here. But we've had a few pullbacks to 21 EMA that have been viable. For me, it's a little extended from. I like to buy near the 21 EMA. That's kind of where I
Yeah.
found success. But it's a strong stock and is tightening up these past few days. This hesitation after this move up is a little bit worrying. So I definitely want to see fall through to the upside. But yeah, I like it. What are your thoughts on it?
All right, so Richard, this actually was a green line breakout, and it held it. Has not closed back below the green line.
Nice. Yep.
All right, but what bothers me, I'd like your opinion here. What bothers me is there was no volume.
Yeah.
This is a very low volume stock, and even though it had a green line breakout and was going to all-time highs, the volume hasn't come in.
Yeah. So
Would that stop you?
yeah, so I would say there was a lot of volume that came in lower before the breakout. But yeah, for me, ideally, you'd see another consolidation, another part of this base form, and then see the volume reconfirm here because you can see volume has dried up since these days. So that would give me more confidence that this trade was going to stick. This is insurance, right? This group
Right,
in general
right.
has been acting really well.
It's very strong.
Yeah.
I do like, take a look at this, SKWD.
Yep. That's Skyward.
Yeah,
Yep. So there's a recent IPO here.
right. So there's no green line. You couldn't do a green line breakout on it. But it did break out on very high volume to a new all-time high.
Yep.
And
right
then
here.
settled back. And I liked it. I got into it right after the next day there.
Yep.
Right there.
Yeah, that looks great. It was so strong it didn't even pull back to the 21 completely. So yeah, and this is exactly what you want to see on the breakout. You're seeing volume come in. On any pullbacks, you're seeing less volume come in, and then as it pushes higher, volume's picking up again. So this volume here is higher than this down volume here. So yeah, this looks great. It's been on my radar. It's showing up on a lot of high momentum screens.
I know you talked with Pat Walker, and he introduced us to the ADMA.
Yeah.
Do you ever use that as an indicator?
I don't. My main ones are my main one is the 21. If I could only use one, it'd be the 21. But you can see kind of my setup here, the 50, 200, and 21. And I have
Right.
a 5 EMA that I turn off and on here, but I don't have any rules associated with this. This is more for index ETFs and their short-term trend. But the ADMA, I mean, I think it's great. I've done a lot of videos with him where he's really shown that the power moves, the really high momentum
Yeah,
moves,
right.
hold that level.
Yeah. I wanted to have you just say a few minutes about the software you're using when, Richard was, remember, he was a student like you in a sense a few years ago in the honors program and got involved in this, went over to TraderLine where he's director, I guess, of education, I think, and a partner there. And he said to me, I'm going to build a new software program that has the great charting and the fundamentals. And this is the first time, Richard, that I've actually been able to see it. And I'm not trying to do an advertisement for it, but at some point, the students may want to look at that. You want to talk a little bit about it and show some other things it does?
Yeah, sure. So our vision with this is that it can handle anything you want to do when trading. So that's screening, that's watch list management, that's charting. We've got the fundamentals combined with the charting that's very powerful in MarketSmith. But there's a lot of things that lack in that platform where the charts aren't maneuverable like in TC2000. You can't zoom in. You can't do multi-time frame multi-chart views in that platform. So our goal here was to kind of combine both the fundamentals and technicals together in a one platform that's super powerful, and it kind of combines a lot of the functionality. As I said, TC2000, MarketSmith, TradingView is the chart engine that we're using. So it's kind of making a beast that you can use to handle all aspects of your charting. I hate having to subscribe to this platform for news, this platform for fundamentals, this platform for charting. We want to combine all of that into one really, affordable package. So that's kind of our overall vision, and we've got the screening capabilities. This is our screener here, very similar to what you guys have probably seen if you use MarketSmith. And we've got a lot of data points here, several hundred, both price and volume related, as well as on the fundamental side of things. So yeah, that's all I'll say here. Anything specific that you're curious about, Dr. Wish, that we've incorporated, or?
No, this is the most I've seen of it.
Yeah.
And I know you tweet about it sometimes, but I'd like to learn more about it at some time and actually try it out someday.
Yeah, of
And I'm
course.
sure, yeah. I don't know, is it an expensive program compared to all the others, or what?
So MarketSmith is 150 a month. This is 50 a month. So it's pretty considerable savings compared to that platform.
Great.
Yeah.
Well, that's amazing. I look forward to seeing what you do, because you keep evolving it, don't you, as you talk to various people and you get questions and suggestions, right?
Yeah, 100%. And we're about to come up with the more kind of dashboard related views. So, in TC2000, you can move your watch list anywhere. You can have multiple charts, all of that. You can kind of reorganize it however you wish. We're going to bring that to DView as well. So right now we've just kind of got a screener view, watch list view, where you can tab through your different watch lists up here. But we're going to open it up so people can do whatever they want with it. So that's kind of the biggest feature we're bringing pretty soon.
You've interviewed some of the greatest traders in the world, basically. I know you've done a lot of YouTube interviews there. Anything particular that you learned that you would really say you want to tell the students that you gathered from listening to them? Because I know they've been phenomenal interviews, and I know the students aren't going to have time to go back and look at all your interviews, which are available, aren't they, for people to see?
Yeah, all of them are my channel or the Traderline channel. I would say everything that you're learning in Dr. Wish's class stems from the same principles that they're using. A lot of them keep it a lot simpler than you would think. So you'll see a lot of their chart setup look like this, where you've just got price, you've just got volume. That doesn't mean indicators aren't helpful, especially if you've got rules associated with them. But a lot of them just look at price and volume action. All of them are extremely passionate and driven about this. So if that's you, then you're well on your way. But we just did a class with John Boyk, Dr. Wish, and he studied, Livermore, Wyckoff, O'Neill, all these great traders, and the majority of them take about 6 years to become profitable and to really do well. So even if you're struggling at the beginning, this class is a huge leg up. But even if you're struggling at the beginning, you can turn it around and improve your process and really make a fortune doing this, especially with this kind of this foundation that you're learning in Dr. Wish's class. That's kind of what I would say. And I've done a presentation that's like 10 lessons from my interviews. So if you search that, I think I go through a whole presentation about that.
Yeah, don't you have some handbook that you've made available free to people?
The trading guide, is that?
Yeah.
Yes. So that's something we put together. I'll send a PDF to Amy and she can share it with everybody. That guide basically culminates a lot of the trading knowledge that I picked up, as well as the other traders at Traderline, my partners, Ross Haber. He was a portfolio manager with William O'Neill. It incorporates all of his knowledge. Rye, he currently manages 30 million, incorporates his knowledge. And we're actually doing a video version of that guide. Basically every Saturday we're doing one presentation. So this is completely free. Each webinar is about 2 hours. So If you really love this stuff, go ahead and give it a look if you're really invested. But we cover this one covers mindset, reading price action, the very basics. This one covers the setups that we use. This one covers kind of the shorter term entry tactics, like I mentioned, the range breakout today. Go really in depth here. This one is really important. It's about setting stop losses and sell rules. The risk management aspect of it. So this weekend we're covering screening and daily routines. So in each one we're kind of covering a key concept that you could learn in that training guide, or you can watch the video version that we're doing live if you wish.
So can you send Amy either an invitation or a link that we can put out to the students?
Sure, of course.
Yeah, fantastic. Was there anything else you wanted to go over?
No, I think that's it. Sorry if this is a little bit shorter or not what you quite had in mind, but I'm happy to answer any questions any of the students have, and or anything else that you'd like to cover today.
Anyone have some questions?
I do. Are you thinking about a follow-through day with the trading that's going on today?
Yeah, so let's bring up the cues. So, I mean, look at this bar here. So what I was watching, and I had that screenshot of earlier in the day where we were more down here. What I was watching is I was seeing that there was a range forming at these base lows, and I was looking for a large volume move back up through the 21 EMA. So exactly like a day like today. I mean, just looking at this action, it's telling me there's a lot of power. A lot of individual names are supporting that. So that's why I put on some new trades today to kind of test the waters. We'll see if things stick. But I think today could be a little bit of a trend change. I like to see we're back above the 21 EMA, but it has to stick, and we still have to get back above that 50. So, yeah, curious to hear how you're interpreting it, and also Dr. Wish as well.
Yeah, I think I wrote in my blog maybe a week ago, and there's a lot more to it than just the technicals, but what I've noticed over the years is the market goes down at the end of a quarter, and then as earnings are released, usually there's a lot of energy and the market goes up. And we're about to enter quarterly earnings release now.
Yep.
So I was expecting some type of a rise at some point, over the next few days.
Yeah, I mean, I like how it coiled, and yeah, I put on some starter positions as well as some QLD today. So we'll see if things stick.
And everyone should know what follow-through day is. Again, go back to William O'Neill's book and look it up, and see how it's defined. Because every bull market starts with a follow-through day. But a lot of follow-through days don't lead to bull markets.
Yeah.
Someone else had a question up there, I thought.
I was just going to ask, do you use the same screener, like for the Focus 10-1 and essentially everything you have? Is it all based off of one screener or multiple?
Yeah, really good question. So these are watch lists that I've made, but to create these, what I do is I have a few main screens here that I use. The main one is the Deep View Universe screen, which is, I'll show the criteria. It might be a little bit complicated, but just very in general, this screen is a pretty wide net. So it usually returns about 300 to 400 stocks. And it's looking for stocks with strong relative strength that are in uptrends, that are acting pretty well in leadership groups if possible. So what I do to create all those watch lists is I just spacebar through these names, and if they stand out to me, I'll add them to a list, and then I take that list and squish it down even more, refine until I have a weekly focus list or a daily focus list. So this is my main screen, and this is basically, you can do this with the Growth 250. You can do this with just one of Mark Minervini's templates, which you can find as well down here. So whatever general list you want to use, you can basically load that up and use that to basically start your process. But for me, My favorite to start with is the DP Universe. I actually designed this one, and it does a pretty good job of capturing the leading stocks in the market.
Richard, they're now in the process of filling out their transaction report
Yeah.
and putting down the various criteria that they're going to use for buying stocks.
Mhm.
Would you mind sharing, for instance? I'd just like them to get a feel for the types of things you're doing. I mean, you probably have relative strength in there, some other things. I mean, is it something you'd share with them or not?
I'm happy to share. What exactly would you like me to share?
The criteria that you scan on
Oh yeah,
to get this.
yeah. So let's
Right.
take a look. It's a little bit more complicated because we've got these OR groups that add functionality, but I'm looking at dollar volume, which is basically average volume times the price to get a sense of is this stock liquid or not. I'm making sure the price is over $10. Ideally, it's over $50, but I like to cast a wide net. I'm looking for relative strength score or rating, whatever you use, ideally above 90. Industry groups, ideally you always teach top industry groups. That's the exact same thing I'm doing here. Top 15 or top 40. And then I look for pretty simple above the 200-day moving average, above the 50-day moving average. So it's everything you've been teaching, just kind of my own spin on it.
So, like when you have relative strength RS scores, that's not the IBD or MarketSmith score. Do you calculating your own percentile score?
Yeah, it's our formulation, but it's the same idea. You can use it
Yeah.
pretty much interchangeably. And
Okay.
yeah, we have a 1 month score and a 3 month score, so that's looking at a shorter time period and ranking the stock's performance versus all stocks over that period. So
I see.
yeah, I like those faster ones a little bit longer because sometimes you can have a 12-month score of 90 and the stock can be in a downtrend below the 200-day moving average if it's already had a big move. So I like looking at the shorter term scores a little bit more.
Fantastic. Thank you. So those are all your criteria you use, basically, in this scan.
In this scan, yeah.
Yeah. Okay.
Exactly.
All right. So it is very similar to a lot of things that I'm teaching the class.
Yeah.
Yeah.
100%.
Yeah. Great. Any other questions?
Yeah, I had a few more if you don't mind. So I've noticed you've done like the consolidation trading, and do you enter before, or not before, but like do you enter during the breakout or after? Like do you wait for confirmation? Are you worried about a pullback or?
I enter as it's breaking out. So as soon as if these two highs, I'm just looking at ACLS as a random stock, these two highs are close together. If this was happening early in the morning, if this was a little bit of a stronger setup above the moving averages, as the stock is pushing through this level, I'd be buying if the volume run rate is coming quickly. So I'm not waiting into the end of the day when it could already be extended up here. If we bring up, let's bring up what broke out today, Crowd. Bring up this stock. You want to buy it if this level is your pivot. You looking at this high, pretty close to that. You want to buy as it's pushing higher here, not when it's already gone 7%, 8% higher, because then a normal pullback will just stop you out. You want to be able to manage risk a little bit tighter by looking for, you want to enter right at the pivot if possible, within a few percent of that.
All right, so if you enter at the pivot, and you just said that there would probably be a natural pullback, are you doing a very short-term trade, or would you hope that the pullback wouldn't hit your stop and continue the upward trend? Or
Yeah, so if the stock is, if it's a real breakout and it's going to work, the stock will hold that stop loss. If it fails, it fails. That's part of trading. I mean, we looked at RYTM, which is a stock I bought and talked about last time. That one ultimately failed. RYTM, let me bring that up. So I bought this day as I was pushing through this level. It closed really nicely. We saw volume pick up a little bit. It was looking pretty good. And then the next day it stopped me out. It's kind of part of trading. So I'm just kind of honoring my rules. And if it stops me out, so be it. I'll either wait until it sets up again, but I have to manage my risk and make sure I keep my loss to a minimum. I'm not
Do
sure
you
that.
pyramid, Richard, do you pyramid up?
No, I don't. I don't.
The last question I had was, when do you employ the 5 EMA?
The 5-day, that's only really for index ETFs, and I turn that on to see what's the very short-term momentum. Are we above a rising 5-day moving average? So here, for a long time we were below the 5-day, then we were chopping around it. So it's only really for the QQQ or the IWO, and to see that really short-term momentum. Yeah, good questions though. Anything else?
Is that it? Well, Richard, thank you so much for giving you your time to help the class out. And I'm going to invite John Boyk, who I know did this phenomenal presentation. I don't know, it's a course that you have that's, what, 10 sessions, is it?
Yeah, it ultimately, 10 sessions, and they're each
And,
about 2 hours.
Yeah, and he's written a number of books where he's interviewed a lot of these people, or he's studied what they did, and he puts it all together. So he has said he wants to come to the class, so I'm hoping to invite him for some time in November, I think.
Yeah, that'd be great.
Yeah. Okay. Thank you, Richard. Let's acknowledge him. Thank you, Richard. Nice job.